There's a massive warning coming out from banks as they dump bonds. They are dumping loans to the federal government, to mortgage backers. They're not loaning money to other banks. They are running scared. And if you're not listening to what the big banks are doing, listen to what the big investors are doing. Warren Buffett is piling up a stack of cash to make him look like the Joker from Dark Knight. Right? I mean, just this pile of cash. He's moving out of cash. He hates cash, and yet he's moving all into it. You have Michael Burry out there who's bet $1.6 billion on shorting the market. He's the guy from The Big Short. I mean, this smart guys out there are all kind of stepping back and saying, this isn't a good time, and now we're getting this major warning out of the market itself. The Treasury bills interest rate has gone up to a 16-year high. Friends, it is as high as it was in 2008, or actually 2007, right before the stock market crash. We're seeing interest rates on treasury bills or savings bonds or people loaning money to the federal government higher than they've been since 2007. And it's not just them. Mortgage rates, interest rates are up at Y2K levels. We haven't seen mortgage rates at this rate since Y2K. So, year 2000. That's a while back, folks. We're talking about some unprecedented moves, at least in recent history. We've heard some unusual storms coming up. We've seen fires in unusual places, hurricanes in places where hurricanes just don't go. But we're also seeing some big things moving in the markets right now. And it's not like the United States economy is doing well. It's not like it's doing well at all. We have 11 million open jobs out there. Well, they're open for anyone who wants to work, right? But we have 7 million men in the United States between 25 and 54 who are able-bodied, not disabled, that are not looking for work. 7 million people, 7 million men between 25 and 54 who are not looking for work. They're not on unemployment and they're kind of looking. They're not supposedly looking. They have dropped out of the workforce. We have 4 million more open jobs than we have out of the workforce people, right? We have, when the cough hit us, we have 4 million less jobs. 4 million less people working jobs and 4 million more open jobs since the cough. So if you do the math there, 4 million people dropping out of the workforce, which has led to 4 million more open jobs that haven't been filled. Have you gone by a fast food restaurant recently? Have you gone to stores that have all those help wanted signs up there? And you can tell by the service that they're short-staffed. You go to restaurants and they close early. You see hours getting shut down at different stores because they don't have enough employees. Where did all these people go? Well, 7 million men, able-bodied, between the ages of 25 and 54 are just not working. How's that work? We haven't seen this outside wartime. And in wartime, those guys are doing something else, right? They're on troop ships. They're invading countries. They're defending countries, right? But not today. They're sitting playing video games, or what are they doing? What they're not doing is they're not working. And so anyone who says the economy is great and strong and everything like that, I'm not saying that necessarily there's 7 million people can't, don't want to work. Maybe they just can't find a job. Or maybe they can't find a good enough job that's going to pay more than unemployment or welfare or whatever benefits. Or maybe it's better for their spouse to go to work or their girlfriend to go to work, or these days their boyfriend to go to work for them. All we are seeing out there is just there's a tremendous amount of Americans out of work. And that is severely impacting the production of the United States. So when we go over to the stock market and we look over at the bond market and these financial things, and we know the economy is not good, And then we look at the markets and they're telling us that things are good, except for the bond market isn't. The bond market's flashing these warning signs because the banks are dumping treasury bills. China is dumping treasury bills. Every country out there, the BRICS countries, are all dumping treasury bills. They don't have full faith in the credit of the United States government anymore, and rightfully so. It's not that we're up to our eyeballs in debt. We are well over our head in debt. We're underwater in debt. That's where we are right now. Anyone who loans the U.S. federal government money right now, they got a couple screws loose in their heads right now. And if you look at your portfolios, if you have managed portfolios in your retirement accounts, your brokerage accounts, you should not be surprised if you find a whole bunch of treasury bills in there, stuffed in there. One place or another, there's a fund here or that, and they got a whole bunch of money sitting in treasury bills. They've taken a massive hit. As interest rate goes up on bonds, the value of the bonds drops. It's just kind of how it works. If you're holding it at like 1% interest, okay, and the new bills are out there issuing at 6% interest, who wants your 1% yielding bond? Nobody wants your bond that's yielding 1%. Now, they want the new ones, right, that have a higher interest rate. So you're stuck holding this worthless piece of garbage that you don't want, and nobody else wants to buy from you, except you're going to have to take a pretty big loss selling that to somebody. You loaned out at 1% interest to the federal government. Will you ever get paid back? Who knows? So we're seeing these issues out there in the markets, and we should be skeptical. Mortgage rates highest since year 2000. In the year 2000, there was $6.7 trillion worth of mortgages out there. There's over $19 trillion worth of mortgages today. That's a little bit of a difference, isn't that? It is. It's impacting the market. It's impacting the finances of the entire country a lot more. People are not selling their homes. People are realizing that if they sell their home and move to some other city or some other place, they're going to have to get a new mortgage at a much higher interest rate. They're either going to have to buy a whole lot less house, or they're going to get stuck paying a much higher interest rate on the same size loan. So that's not good. We're going to start seeing housing values plummet. The only reason that they've held up so well is because nobody's selling. Nobody wants to sell. If you got a sweet, 4% mortgage, that's nice. You don't want to sell. You don't want to get back in at 9% interest or 8% interest. You don't want to do that. So you're going to sit nice and cush with your 4% interest at the job you hate, or not close to your parents. That's just what we're seeing out there in the market at large. So take this information, do with it what you will. But we got Jerome Powell out at Jackson Hole. He's going to be giving a speech on Wednesday. He's probably going to say stuff that's going to upset the market, probably. We got the BRICS meeting starting today. The BRICS meeting has already started today. We'll see what kind of announcements we're getting out of that. But basically, they're very anti-U.S. dollar. So expect to see the U.S. dollar come crashing down over announcements of that. Expect the dollar to strengthen after Jerome Powell gets out there and says mean things. And expect the stock market to be going up and down and left and right. It's going to be a crazy week. So just think through where you are and where is a safe place for your investments, for your retirement funds, and invest in real items, right? That's what we say. First things first, get out there and buy food, stockpile food. Buy property if you can. If you can get out of the cities and buy some property where you can produce your own food, that's a great investment. Or if you don't own your own property, buy a house if you can. Buy some property if you can, even if you have to build your own place, and get more self-sufficient. If you can grow your own food, that's food that you don't have to stock. and that's huge. All right, folks, if you got some more suggestions, pop them down in the comments down below. Appreciate you all. Thanks so much for watching. If you want to check out another video from this channel, there's one right up here. I'll see you over there, or I'll see you guys later. Steve Poplar of the Poplar Report out.